Are you wondering what the best stocks are for beginners? If you want to know the answer, stick with us until the end of the video to find out the top 8 stocks with a 50% return. Hello future billionaires, welcome to Stock Investing 101, the channel where you get stock inspiration, motivation and knowledge to become the next future billionaire. In today's video, we bring you 8 stocks with a 50% return, best stocks to buy now. Without any further ado, let's dive in. Number 8. Cresco Labs. One of the best ways to go green in 2021 is to start purchasing multi-state cannabis from Cresco Laboratories. Although we can see some modestly relaxed prohibitions on marijuana from the federal government, Cresco simply requires state-level legalizations and organic growth to flourish. On the one hand, the company has a limited but steadily growing presence in the retail sector. It holds 20 operating stores and 29 dispensary licenses. Around half of these open locations are located in Illinois. The land of Lincoln started to allow the selling of recreational marijuana a year ago. Estimates say that Illinois could add up to $1 billion in annual pot sales by 2024. But Cresco's wholesale division is an even more exciting growth area. In January 2020, acquiring Origin House allowed Cresco to enter into possession of a cannabis distribution license in California, the most lucrative pot market in the world. This helps the company to put cannabis products in more than 575 dispensaries in the Golden State. If we assume that California regulators will continue to work through existing red tape, Cresco's access to dispensaries will increase in 2021 without having to do much in the way of legwork. Number 7. SSR Mining. SSR Mining Gold Stock is a bit of a homer game as it's been my biggest holding company for years. Although it's unusual to see a mining stock double in a single year, SSR has a confluence of factors that could lead to a triple-digit gain. From a macro viewpoint, the outlook for physical gold has never been any better. The Federal Reserve has vowed to keep interest rates close to historic lows by 2023, and the central bank continues to purchase $120 billion in federal government debt per month. In addition, a record amount of global investment-grade debt has recently seen a negative return. It's very difficult to find healthy, inflation-topping returns, which is why physical gold will easily climb above $2,000 an ounce in 2021. But it's not just higher gold prices that will benefit SSR Mining. It has recently concluded a merger of equals with Turkey's Alesa Gold. Alesa holds an 80% stake in the high-yield, low-cost Çöpler mine. In 2021, SSR Mining's output is forecast to reach 700,000 ounces of gold equivalent, giving the company $450 million in free cash flow. SSR is also launching a dividend program in the first year. Traditionally, the gold and silver stocks rocketed higher in the early stages of economic recovery, suggesting that it's SSR's time to shine. Number 6. Cloudera. Finding a cloud-based business that is priced at less than 10 times the revenue is nearly impossible. The coronavirus pandemic has shown how critical online and cloud access is for companies that have pushed investors to pay crazy multiples. But an interesting name fell between the cracks: Cloudera. The thing about Cloudera is it isn't always a cloud company. Over the past year, it's stepped away from its legacy data infrastructure and put out its current private cloud and public cloud hybrid offerings. In the October-ended period, subscription revenue jumped 18% from the previous year. Cloudera is now searching for a $500 million share repurchase program for its shareholders. If completed, Cloudera could remove an eighth of its outstanding shares. Buyback programs aim to boost earnings per share and make the company more valuable to investors. With revenue growth likely to surpass Wall Street's expectations in the calendar year 2021 and a company priced at just over 4 times the year's sales, Cloudera has plenty of incentive to boost this year's sales. Number 5. Organigram Holdings. Your eyes are not deceiving you, Organigram is a Canadian pot stock. While Canadian marijuana stocks have been a terrible investment to date, Organigram has a few unique advantages that could make it a huge surprise to Wall Street in 2021. One of the main concerns with Canadian pot stocks is that they have been hamstrung by federal and provincial regulators. The good news is that the key provinces, such as Ontario, have begun to launch new dispensaries at a steady rate. In other words, supply bottlenecks that have crushed the margins and market demand should be a thing of the past this year. In order to expand on this point, Organigram also employs 3/3 in its cultivation rooms, which optimize its licensed area and help to increase overall yield. It wouldn't surprise me if the cost-cutting of Organigram, combined with the maturation of the Canadian marijuana industry, enabled the business to make a profit in 2021. It wouldn't take much to double their stock with its shares so deeply depressed. Number 4. EverQuote. In the financial sector, the online insurance marketplace EverQuote could provide investors with an even higher result after a rocket hit in 2019 and mostly sideways in 2020. The uniqueness of the EverQuote model is that it's designed to take advantage of insurers switching their customer capture activities online. An estimated $146 billion is spent annually on advertising and delivery by insurance firms, of which $5.6 billion is spent on digital advertising. This digital investment is projected to rise by 16% annually through 2024 and is where EverQuote is making its home. While the company has traditionally generated much of its revenue from auto insurance, it has moved to new verticals organically and through acquisitions, such as the purchase of CrossPoint Health Insurance Agency in early September. This includes health, house, rental, and life insurance. These newer verticals have expanded at a much faster rate than their conventional insurance segment, and EverQuote has been responsible for raising its full-year revenue outlook on a regular basis. The simple truth is that the EverQuote platform is a win-win for all parties. It's an easy forum for customers to easily buy insurance prices without filling out a mountain of paperwork, and it's an effective way for insurers to get interested consumers to land. EverQuote provides sustainable double-digit expansion, but is priced at less than 3 times the year-to-date revenue. Number 3. Teva Pharmaceutical Industries. The brand name and generic drug developer Teva Pharmaceutical Industries is a logical option to bounce back in a major way in 2021. To keep it short and sweet, Teva has been clobbered in recent years by a bribery settlement, its involvement with the opioid epidemic, and the accusation of generic drug price fixing. This is not good news, but the organization still has a hidden weapon: CEO Kåre Schultz. Schultz's tenure started in November 2017. Since taking over, Teva's annual spending has been decreased by $3 billion, and the company's net debt has been reduced by more than $10 billion. On this course, Teva's net debt is projected to fall from $34 billion to potentially less than $15 billion by 2023 from the north in 2017. Apart from increased financial stability, Schultz should also be responsible for driving Teva out of its legal mess. If the company can settle its pending drug and price-fixing litigation without anything in the way of cash fines, that alone could have more than doubled Teva's share price. Number 2. Jushi Holdings. In case you haven't heard, this year's US weed supply is a major problem. Despite more than a quadrupling in value over the past 6 months, the vertically integrated multi-state operator Jushi Holdings has doubled Mine Node as a nominee. What is peculiar about Jushi is its emphasis on the restricted licensing states of Pennsylvania, Virginia, and Illinois. A restricted state license shall be limited to the total number of dispensary licenses issued or granted on the base of a particular region. The benefit of this strategy is that it protects Jushi from most, if not all, rivalry. Jushi also stands out because its management team has a healthy amount of skin in the game. Of the approximately $250 million in capital raised since its inception, executives and insiders have contributed $45 million. Good things usually happen when insiders and investors are on the same team. The opening of retail outlets in Virginia, along with prospects for organic growth in Pennsylvania and Illinois, saw Jushi almost triple its revenue in 2021. That alone is enough to double the price of its share. Number 1. Lovesac. After a nearly 170% rise in 2020, I'm seriously suggesting that a furniture company might make back-to-back triple-digit returns for investors. Lovesac is distinctive in a number of ways and starts with the company's modular furniture. Targeted at millennial investors, the yarn used in Lovesac stockings is crafted from 100% recycled plastic bottles. Its furniture can also be rearranged to suit any living room, with over 250 machine-washable covers that can be purchased. It's eco-conscious and puts the user in complete charge of their living room. Beyond a compelling and superior product, Lovesac has worked tirelessly to change its game plan to function during the pandemic. With showrooms closed in some countries, the company has primarily relocated its online sales site. While major showroom partners are still landing, example Best Buy, the pandemic has shown that Lovesac can function with minimal overhead on a direct-to-consumer basis. This effectively boosted its quest for recurring profitability. The insane thing is that Lovesac is now priced at just 1.6 times its year-to-date revenue. As this young bull market extends its wings, look for Lovesac to become a favorite among growth-seeking investors in 2021. If you'd like to stay up to date with the best and latest content about stocks and entrepreneurship, then make sure to subscribe to our channel and leave a like on this video. Did you find this video valuable, or do you want to add anything? Make sure to let us know in the comment section down below. We're posting a new video every day with the most undervalued stocks in the market right now.